closing lower this afternoon after more hawkish comments from yet another Fed official.
But the question is, what do you miss?
T-minus 7 days before Fed Chair Janet Yellen shares her view on where U.S. monetary policy is headed. We've got the charts you can't miss in the lead up to the Jackson Hole meeting.
Plus, Chipotle is still in a funk and Wall Street is getting impatient. Does it just need to grow up?
And rapid demographic shifts in tourism around the world. We'll find out what it says about the health of the global economy.
We begin with our market minutes. U.S. stocks drifting lower, and really I do mean drift because it was a pretty modest move here for equities, even as it's the first decline in 3 days. Here's a stat that kind of tells you what happened today. The S&P 500 is now in its 30th day without a 1% move in either direction. That is the longest stretch since 2014. S&P unched. Oh, look, the Nasdaq flipped higher by the close, up by 5 points. That's a 1 week. Thank you. And the Dow down 25 points.
It goes to show not only was it a very quiet day, but it was a very quiet week. I mean, those could easily be one-day moves, and that was the entire week.
And we're hovering near record highs, of course. That's the backdrop, too.
Exactly.
Yeah, no, in fact, I'm glad you started with this because that's the one to go with, is the 1 week. Because, again, this is just really very little happening in the market. The Nasdaq there turning green on the week is particularly interesting as tech stocks have kind of come to the aid of the rest of the broader market. And this basically left stocks with the second weekly loss in about back to June, basically. But if you look at some of the sectors, some of the things we've been talking about continued, but in particular today there was one interesting move, about a 90 basis point move in the semiconductor subgroup, in particular led by really green across the board within this group. Applied Materials and Micron both getting big boosts. Applied Materials in particular up 7%. And then I got to close on it because it's the story that's been going on. It's utilities and financials, utilities and telecom stocks, which today, the only real group that's moving here recently, and they're moving downwards. Perhaps that sort of value stock bubble, as some identified it as, and maybe starting to let some air out.
And one of the big sectors that lost in the stock market were those yield-sensitive areas like telecoms, utilities. Here's a chart that sort of shows why. It's a 1-month chart of the U.S. 10-year yield. You can see we've been in, and I don't want to call it an uptrend because it is so minor, but in the grand scheme of things, it has been ticking up lately. U.S. 10-year yields closing out today at the highest level since early August 8th or August 9th there. You can see it ticking up. All
right. And meantime, I'm focusing on the pound here. This is euro pound. So you can see how the pound tumbled versus the euro after Bloomberg reported that Prime Minister Theresa May's team would likely formally trigger Brexit talks by April of 2017. That's a little bit of a pushback versus earlier reports that May could wait until the end of 2017 before beginning those 2 years of negotiations. There is a natural deadline to keep in mind here because Germany and France will be preparing for elections. This new April 2017 date is according to British officials who declined to be named.
And also, you're talking about oil. There's a 1-month chart of oil back in early August. We were talking about that bear market in oil, but it's really erased, ticking higher again today. And it ended up for the month of August up 8.5%. Oil back in a bull market. So pretty impressive recovery versus how gloomy it sounded just a few days ago.
But as you guys were saying earlier, a bull market within the bear market.
Exactly right.
All right, those are today's market minutes. Let's take a deep dive now into the Bloomberg. You can find all the following charts using the function at the bottom of the screen. I'm taking a look at one of the big company news stories that we're looking at, which is Viacom. The CEO, Philippe Dauman, is now out. He fell victim to Shari Redstone and her father, who controls the company. Investors are now beginning to lay the groundwork. That's according to Jason Bazinet, an analyst at Citigroup. They're laying the groundwork for Viacom, which is the blue line, and CBS, which is the white line, to reunite after more than a decade on their own. These lines represent their price-earnings ratio. So you can see that the valuation gap is closing. The spread narrowed as much as 57% since March. It set an 18-month low in July. All of this according to data compiled by Bloomberg. It'll be interesting to see how this happens and what shapes up next because there's been so much drama there.
So much drama. So at least one chapter appears to be over. I'm looking at emerging market stocks. I got sent this chart by Bloomberg user Mark Dow, We like to get charts from users. And this is a 10-year look at just the emerging market ETF, EEM, versus SPY, the S&P 500. And the question is, have we at a bottom? We know emerging markets have rallied significantly, but is this a durable turnaround or not? Some of these the white line is just the EEM versus the SPY, but some of these other lines are the 20-week and 50-week moving average. And you can see the purple line, as I've circled there, is close to potentially breaking up above the green line, the 50-week moving average. It hasn't happened yet. There have been a few times recently, back in 2012 and 2014, when it tried to break out of the range, but couldn't quite yet. So keep an eye on those, perhaps. If it looks like the 20-week moving average can continue to rally, maybe that's a sign of a durable bounce back.
Everyone's looking to see how much further this emerging
Right. Is this just
has.
another? We've had some of these bounces along the way down. So is this different? We'll find out.
It's a great chart. I love it. You've got the 200-day moving average there is perfectly parabolic, given this sort of drop down there.
Sure.
So, but hey, you pass the 50-day and suddenly things will start happening. I'm going to be looking at stock volume. In fact, looking at some market structure type stuff, exchanges. This is a chart built out and maintained by Nick Baker. It was relevant to a story by Annie Massa today that's basically looking at Brad Katsuyama of, I guess, Flash Boys fame. I hesitate to call it fame, but
Notoriety?
Yeah, Notoriety. There you go. Their new exchange, IEX Group's new exchange, basically started trading here. And essentially what you're seeing is a trend here over the course of the past really year or so where there's more and more volume happening off exchanges. Of course, the market structure for trading has changed so much. It's becoming more and more dynamic. In fact, let me see if we can zoom in here a little bit. But
red line is off.
Right. So red line at the top, we're looking at off exchange, which is about 39%. So a little bit of a tick up here. This is a rolling 30-day basis, 30-day average. And basically what you're seeing is more and more trades happening off your main sort of exchanges. You can see BATS and the NASDAQ also ticking down a little bit. So it's going to be interesting to see how that space evolves and more sort of trading platforms come to the market, including IEX's, which is en route.
Definitely one to watch. All right, Bloomberg economics reporter Matt Boesler joins us now. Matt, thank you very much for joining us. Next week, we have the huge Jackson Hole event. We're going to be hearing from brilliant minds in the world of monetary policy, including Janet Yellen. But what are you looking for? What are you looking at these days?
Well, first of all, you know, everyone's going to want to hear what Janet Yellen has to say about when the next rate hike is going to be. So she probably won't tell us. But, you know, whatever she does say, people are going to take clues from. So that's the first thing. The other big thing is just the topic of the conference in general. It's designing resilient monetary policy frameworks for the future. So really looking out beyond when is the next rate hike going to be, like much bigger existential issues about the future of central banking. Are we ever going to even get back to a world in which central bankers can just control monetary policy through interest rates, or are we kind of in a permanent situation where they're going to be using balance sheets and that sort of thing going forward?
All right, so let's just get the short-term chatter out of the way then. We have a chart here that shows the probability of a September rate increase, and that is the white line, versus the probability of a December rate increase, which is the blue line. And for a September rate increase, we're looking at 14%. For a December rate hike, it'd be at 30% right now. What's the likelihood that Janet Yellen basically punts, doesn't give us any indication of whether it'll be September or December?
I think that's fairly likely. You know, it depends. If she really wants to hike, then she's going to have to send a signal. But otherwise, she won't, right? It's really that simple. But given where markets are right now, given sort of the sense we get from the FOMC minutes that it doesn't seem like they're in a big hurry, it's a little bit hard to imagine her teeing up a rate hike near term. Even if they're looking for one in December, say, that's still far enough out where you can kind of take care of that later. You don't have to do that at Jackson Hole next week.
Matt, I can tell that I've been hanging out with you guys more because I think the story of the week was probably John Williams' essay and talking about inflation. So I wonder, when you have this sort of meeting of the minds next week, any chance that they're going to be discussing where and how, I guess, to target inflation, reflect on some of the comments that he made this week?
Yeah, you know, that's an interesting question, because what he wrote about inflation targeting and potentially having to raise the inflation target gets to the very heart of this topic at Jackson Hole, which is, you know, we need to think about things other than what we've been doing, what we've done historically, because that's probably not going to be an option. So the ideas he put forward, potentially raising the inflation target, moving to nominal GDP targeting, we may not get much on that stuff, but that's very much in the background. That's sort of the context, I would say, or the backdrop for what they're going to be discussing.
One thing you're looking at, I have a chart on the Bloomberg. You titled it "Rates Rising but Not Because of the Fed." What's going on here?
Yeah, so this is another thing that's very much related both to short-term and long-term issues. So LIBOR has been a really big story, and that's what the blue line shows, is that 3-month LIBOR is rising much higher than 1-month LIBOR. Now the white line is the component of that LIBOR increase that is really about Fed expectations. So you can see that hasn't really moved much. This is not a move that is about, people think the Fed's going to raise rates. This is really banks are having a harder time finding dollar funding because of regulatory reform, especially, and just other sources of dollar funding are kind of drying up, like petrodollars, for example. So, this global environment right now is really not conducive for banks getting funding, and that's kind of the purpose of a rate hike. So maybe that sort of precludes the need for one at the moment.
Okay, Matt, I want to jump into a function that you sent us, a chart in my terminal here. I'm not even going to try and comment on it. Why don't you just tell us why we're sort of looking at this, basically price expectations by gender?
Yes, so this is from the University of Michigan Consumer Survey. These are inflation expectations, very important to the Fed. This is kind of what keeps the Fed up at night right now, because you can see that for women, inflation expectations are at a record low. And that's why I'm highlighting this, because for men, they're just shy of a record low, and the overall is just shy of a record low. But you can see how tenuous the situation is right now. They've really plunged over the last few months, and that's just kind of an interesting way to look at it.
I don't think I ever realized before that they were broken down that way.
Yeah, actually, it's pretty cool. The survey breaks them down by age, gender, income, education, all sorts of different ways, and pretty much across the board they're falling and near record lows. So this is why the Fed is being very careful right now, because that's not something where they want to get into hiking rates and then have that go further. That's going to be a really bad situation for them.
And that's one of the things people point to when they say that the U.S. economy is not as strong as perhaps some of the data suggests. Narayana Karchalakota, the former Minneapolis Fed president, was writing in Bloomberg View that if you look at GDP since the end of 2007, yes, the U.S. grew faster than the rest of the developed markets. But he says the U.S. population grew faster than Europe and Japan, so it goes that the economy should grow faster too. What really matters, he says, is to look at the per capita GDP. And if you look at real GDP per capita, we've got a chart that illustrates it. The U.S. is actually not that much further ahead. If you look at it, Germany, for instance, which is not on this chart, though, is growing faster than the U.S. Europe as a whole is only 4 percentage points short of the U.S. rate. So the U.S. is blue and Europe is purple. Japan is pretty much up there as well.
Yeah, that's a good point. It just highlights how all of these major central banks, the Fed included, are really all dealing with this same issue right now of being so close to the zero bound, needing to come up with new ways to potentially stimulate. And I think those inflation expectations, probably the most dovish chart out there right now that you can find, because that is really what is weighing on their minds right now. With everyone so close to zero, inflation expectations falling, again, that's just not a situation where you want to get ahead of yourself raising rates, and that very much comes through in the conversation that they're having both publicly and in private.
Should be a fascinating week next week. Looking forward to all the talks. Bloomberg's Matt Boesler. Thank you very much.
Thank you.
Coming up, it has been 1 year since Chipotle was hit by a series of bacteria outbreaks, and the shares have yet to recover. They're down almost 50%. Shareholders are growing impatient, so can Chipotle bet on its other ventures to turn things around? This is Bloomberg.
Asensio. Let's get to First Word News this afternoon. First up, President Obama is now heading to flood-ravaged Louisiana on Tuesday. The announcement comes after Donald Trump and Mike Pence toured the damage earlier today. The GOP presidential nominee was among several who criticized the president for not ending his Martha's Vineyard vacation to visit the state. Hillary Clinton spoke with the state's governor earlier today. At least 13 people have died from those floods. Trump campaign chairman Paul Manafort has stepped down. Manafort's resignation comes after the campaign announced a major shakeup on Wednesday. That's its second leadership reshuffle in the past 2 months. Manafort had also come under increasing media scrutiny because of his past consulting for the pro-Russian former president of Ukraine. Trump said in a statement he accepted the resignation. Also, the death toll from the terror attack in the French resort town of Nice is now 86. Authorities say the latest victim had been at a hospital and died from injuries sustained during that July 14th massacre. He is the second hospitalized person to die since the attack. Dozens more were wounded when a Tunisian living in France drove a truck into a crowd. Islamic State claimed responsibility. An Obama administration admission yesterday that a $400 million cash payment to Iran was contingent on the release of a group of American prisoners is being slammed by GOP lawmakers today. Thursday's explanation was the first time the U.S. had definitively linked the two events, which critics called a hostage ransom arrangement. House Speaker Paul Ryan accused the president of misleading the public. GOP presidential nominee Donald Trump says Mr. Obama, quote, openly and blatantly lied about that exchange. And former Baylor President Ken Starr has resigned his post as a law school professor at the university. Starr lost his job as president and chancellor of the nation's largest Baptist university, then accepted the smaller role of law professor in May after a review found the school did little to respond to accusations of sexual assault involving football players under his leadership. Global News 24 hours a day, powered by more than 2,600 journalists and analysts in more than 120 countries. I'm Ramy Inocencio. This is Bloomberg. Scarlet.
Thank you so much. What'd you miss? Chipotle may need to grow up. In the past 5 years, the stock has seen some highs and currently, right now, some lows. Since the bacteria outbreaks, the company has turned in 3 straight quarters of double-digit sales declines. So is it time for Chipotle to rebrand its business? Craig Giammona, consumer reporter at Bloomberg News, joins us now. And Craig, let's start with something in the Bloomberg here that shows that Chipotle is not just about its namesake company, its namesake restaurant. It actually has some other brands as well, Shop House and Pizzeria Locale. But for the most part, 99.2% of its revenue comes from Chipotle. And if you go to by segment, you can actually see how many stores they have. There's 13 Shop Houses and 3 Pizzeria Locales as of the end of 2015.
Yeah, that's right. So they've had these concepts for a while, this Asian concept and this pizza concept, this kind of fast casual pizza. And, you know, before the crisis, it was sort of odd. They had these things, didn't really ever say much about them. As you noted, you know, 99.2% of the sales still come from the burritos. So they've been out there, only sort of getting attention now with people saying, do they really need these other things? Should they keep focus on the core business and fix that? And plus the news that they're going to open a burger concept, which really has been met with kind of, you know, confusion, I'd say, by the Wall Street analysts who are saying these guys have big problems in their core business. Shouldn't they have a sort of a, not a very deep bench when it comes to executive, fix the core business? Should they really be focused on burgers at a time like this?
So where are these other restaurants? I mean, I know Chipotle started in Colorado. Actually, I was at one of the first ones. I think that explains my loyalty. But is that where they're starting out as well?
Some of them have. There's, you know, the pizza places. They've done a couple in Kansas. There's some in Maryland and D.C. So they've done sort of geographic, like, clusters of these. But really, as you saw, they don't move the needle. They're a small part of the business. And the kind of the question I think that analysts are asking is it drawing attention away from what they should be focused on, which is fixing their core business, which is, you know, troubled?
Well, let's talk about that core business. You know, we showed the stock chart earlier. It's basically hasn't recovered at all from when it started collapsing after the bacteria stuff. Are there any signs? Here, I have a chart right here. This is Chipotle stock, basically right at its lows from last December. Is there any sign of a fundamental business turnaround?
No. No, not yet. And the question is kind of when this is going to happen. So when this first hit, people said, you know, it could be 2017 before we start to see this turnaround. I mean, this is a big hit to their brand. News stories about people getting sick, huge headline risk. So the numbers have been bad. You know, they missed again last quarter. 3 straight quarters of declining same store. So it just hasn't started to turn yet.
Have there been any further outbreaks? Like, I mean, I don't remember any headlines recently. Have
No.
these all come to an end?
No, the last person that got sick really was in December. There was a little bit of a scare, I believe, in March, where workers at a Massachusetts restaurant got sick, but they followed protocols, shut down. No customers got sick, but right now it's just sort of a tarnished brand, and they haven't really turned the tide yet.
Yeah, I know. I was just going to say the shares are down about 49% right now. But one thing I wonder is we've been talking about this sort of quote-unquote restaurant recession that has cropped up a few times. How much of this is, I mean, obviously Chipotle has these specific problems, but at this point, is there any chance that maybe it's also getting sort of wrapped up in a more sort of macro trend with restaurants?
I don't think so. I don't think that's what it is. Maybe a little bit, a point here or there, but we're talking about, 23% declines in same-store sales. McDonald's saw a little blip. Wendy's and Burger King weren't great, those numbers. But A, I think it's maybe a little bit of a different customer, and B, just the scale of the declines at Chipotle, the restaurant recession, I don't think is enough to explain it.
Based on your conversations with people, based on your experience following these restaurant companies, do you think that a company like Chipotle right now, with the stock price looking the way it does, is ripe for an activist investor, someone like a Nelson Peltz, to come in and demand changes?
We keep hearing about that. I think that's a question that's on a lot of people's minds. Obviously the big trend right now in restaurants is refranchising. Get out of the restaurant business, to make franchisees take the cost. Chipotle is all company owned, so that's, we saw Buffalo Wild Wings this week. That was the argument there. You own 50% of these restaurants, sell them back. Take the Burger King model. So, and the other thing is it's a very insidery company. The board is insular. There's been criticism about no diversity on the board. The management is, from the founders are still heavily involved. So there are people that think that they're ripe for something like that.
All right, Bloomberg's Greg Giamona, thank you very much.
Thank you.
Coming up, a little audience participation, please. We asked Bloomberg customers to send us a chart. We show you the 3 best. Next, this is Bloomberg. Scarlet Fu. What'd you miss? We asked terminal customers to send us G charts, and we picked the best 3. And mine is on what ails the U.S. economy. It's a loaded question, but we know that we have a lot of debt and we have a huge trade deficit. So the yellow line is outstanding U.S. treasuries. The blue line is the accumulated trade deficit. And our thanks to Robert Steiner of BNY Mellon Capital Markets for sending this in.
Yeah, it's an interesting chart because there are it seems like there's a lot of different ways you could interpret it. You could say like, oh, we're getting killed on trade and the government's going into debt. Or you could say, look, this is just sort of the natural way the economy has to balance out. You lose something somewhere, something else has to replace it. So in this case, it's government spending. But it is interesting to see the way essentially you have these different sectors of the economy, trade, government spending, private assets. Ultimately, they do have to balance out somewhat.
And of course, the backdrop here is the U.S. has lost manufacturing jobs, and
Right.
Donald Trump has said that he wants to renegotiate trade agreements and impose tariffs, so hopefully slow or reverse that blue line on the bottom there. You know, the pushback from other economists who look at a chart like this will say that cumulative trade and trade figures and debt figures don't really tell the whole story about the economy. It can be misleading because we know during 2008-2009 the government was contributing negatively to GDP because revenue was down and spending had to go up during that time. Also, it doesn't account for service jobs.
Also, you
either.
have a lot of thriving economies that run huge trade deficits persistently, including the U.S. for a very long time, even during the boom times. So the idea there's some direct relationship between your trade balance and the health of your economy, the prosperity of the people, is very dubious, I'd say.
I was just going to point out that while the two pretty much are mirror images, if you look pretty closely, it looks like the shares outstanding, or the outstanding treasuries are actually kind of plateauing, whereas you look at the deficit and it's just going down. It doesn't look like there's any relief in momentum.
Yeah, it's probably not perfect. All right, I got a chart that was sent to me from Amerik Mali of the broker JB Drax Honora. I think it's really fascinating. The white line is an index that he put together, just EM risk, and it's basically a combo of EM equities and commodities. And you can see it bounced in January. Starting in January, really been rallying back nicely. And then the blue line is the market's one-year expectations of rate hikes. And it's offset a little bit, but it makes sense because we know that the Fed is paying more and more attention to international conditions. That's been one reason, perhaps, why the Fed hasn't gone so slow. So it makes sense, perhaps, that the market's rate hike expectations would be tied to the fortunes of emerging markets in the world. And so his argument is that the Fed is perhaps, or market is too complacent about what the Fed might do in light of this global rebound.
That blue line needs to come back up a little bit.
Yeah, perhaps it does. So perhaps the market's caught short a little bit.
All right, well, we're talking about emerging markets and maybe a little bit of volatility. I don't know, I'm trying to make a connection, but I'm looking at volatility again. The VIX, I'm not going to belabor the point because we know how low the VIX has been, but this is also pretty interesting. Bob Cinch of Amherst Pierpont points out that there's also subdued volatility in the currency markets as well. So the teal line is the dollar to Japanese yen 3-month currency vol, and the purple one there is the euro versus the USD. Obviously both low. Small tick up in the Japanese yen volatility, but the question here is, as markets just remain complacent, is where are you going to see any kind of volatility spike up from? We've seen it in the currency market lately, but right now, not even there.
Well, it is the dog days of August, so maybe look for dollar yen since it was peaking up a little bit there. Coming up, we're going to discuss the rapid demographic shifts in global tourism and what they tell us about the world's economy. This is Bloomberg.
Ramy Inocencio. Let's get to First Word News this afternoon. The White House says President Obama will visit flood-ravaged Louisiana next Tuesday. He has been receiving periodic updates on the response and recovery efforts, but the president has come under criticism for not cutting his Martha's Vineyard vacation short to visit the state. At least 13 people have died from the floods. More than 40,000 buildings are damaged. Meantime, Donald Trump and Mike Pence have been surveying the damage in Louisiana. The GOP candidates visited with victims of the floods at a Baton Rouge church. Thousands were displaced in heavy rain that dumped as much as 2 feet of water on some areas. On the Democratic side, Hillary Clinton says she spoke to Louisiana Governor John Bel Edwards by phone. In a post on her Facebook page, she says the relief effort cannot afford any distractions. She also says the best way to help is to make sure Louisianans have the resources that they need. In California, more than 200 buildings, including about 100 single-family homes, were destroyed in wildfires about 60 miles east of Los Angeles. That's just based on a preliminary count. Firefighters are making headway, though, which is now 26% contained. Those flames forced 82,000 residents from their homes. And federal health officials are suggesting that pregnant women and their partners should consider postponing travel to all of Miami-Dade County. The warning comes after Florida authorities identified a second zone of local Zika transmission in an area that includes the popular tourist area of South Beach. There are 5 reported cases of Zika transmissions by mosquitoes in Miami Beach. The state now has 2 areas considered active for potential Zika virus exposure. Global News 24 hours a day, powered by more than 2,600 journalists and analysts in more than 120 countries. I'm Ramy Inocencio. This is Bloomberg. Scarlet.
Thank you so much, Ramy. Let's get a recap of today's market action. Not a whole lot of action to speak of here as U.S. stocks falling for the first time in 3 days. No economic data that really moved the markets. So as a result, everyone's looking ahead, Joe and Oliver, to the Jackson Hole meetings next week.
I like the way Oliver put it earlier. Placidity is the name right now. Just sort of very little ripples anywhere in the market, whether it's fixed income, Forex, equities,
clearly.
Everything very quiet.
It does, of course, anytime that happens, it makes you wonder whether or not people are prepared for that, any kind of disruption to that. And I think we went through this week and chronicled a lot of things that are out there, at least in my world, in the stocks world, where people have actually gotten into the market. So we'll see how that pans out.
Is this the point in the move where they're like, oh, it's almost too quiet? Right?
Maybe, yeah.
All right, what'd you miss? You can see changes in the world economy by observing how people travel. And there's a shift underway in U.S. consumer spending that may have a positive outcome for the travel industry. Joining us now to discuss is Rafat Ali, the founder and CEO of Skift, a travel journalism and data site. Rafat, thank you very much. So from your perch, what are you seeing in the world, and what should people who don't necessarily pay attention to travel industry trends closely be watching?
Yeah, the summer is going pretty badly for the sector just because of all kinds of fears, whether it's the ISIS fears, terrorism, larger fears, Zika, immigration, elections in U.S. in general, just because of the general uncertainty. So it's a pretty uncertain time. Obviously, there have been some issues in terms of airlines, IT issues. Southwest had a big issue last week. Delta had a big issue last week as well. So there are a bunch of things that are affecting the industry at this point. We think that travel is sort of the bellwether sector. It's the one that sneezes first when anything happens in the world economy. So it's a very interesting sector to look at.
So I wanted to bring in a comment that I got from the CEO of Kayak, Steve Hafner. We were talking about the extent to which Americans might be taking advantage of the stronger U.S. dollar in their travels abroad. Take a listen to what he said.
Most Americans don't think in terms of exchange rates. It takes time for them and word of mouth from someone else saying, hey, you know what? Europe's about third cheaper this year than it was last year, and particularly in the UK. So it takes time to build, but that interest will be there.
If that interest will be there maybe by next summer, is that enough to overcome all the terrorism fears that abound now across continental Europe?
Probably not. I mean, it depends on what types of disruptions happen. For instance, like Zika. Zika is taking out a huge amount of capacity from the cruise industry, whether it's in the Caribbean or Mexico or other places as well. So I think yes and no. The answer depends on the type of disruption that we're having.
I wonder, in addition to the frequency of some of these events that have kept people, at home instead of traveling, I wonder if it's also sort of where they're happening. If you had asked me really any time in my life, am I going to go on vacation to Syria, I probably would be a little hesitant. But now you're looking at events that happen in France. You're talking about people. Remy Inocencio just said a caution before traveling to Miami.
Yeah.
It's all these places that you don't typically associate with fears about travel.
Yeah, I mean, these are things that are coming at our doorsteps in a lot of ways. But obviously, some of the economies are benefiting as a result. For instance, the capacity that has been taken out of Turkey, Tunisia, Egypt are going to Spain, Portugal. So those are the two countries that are benefiting a lot from all these changes that are happening.
What about looking at it from the perspective of the emerging consumer around the world? So, okay, perhaps U.S. consumers are less inclined to go to Europe or South America, but we know there's been this huge boom in the travel industry outbound from China. What else are we seeing in terms of countries where there's a big boom in the outbound?
Yeah, China certainly. I mean, obviously, it's slowed down a little bit over the last year as the Chinese economy is changing, but Brazil is also actually this year has been pretty bad for the Brazilian outbound.
For outbound.
Yeah, but India is growing very well. If you look at Southeast Asia we think is probably one of the most fascinating areas in the world of travel, just because the sheer amount of people that live in urban areas and the effect of low-cost airlines in that whole region in the world. So we think that Southeast Asia is probably the biggest place to watch.
Well, speaking of Southeast Asia, I was commenting to someone before the recent bomb attacks in Thailand that it seems like it's the safest place in the world to visit right now. The U.S. always seems on edge because it's such a target, and of course this summer has been awful for Europe. Is that a misconception that Asia is safe?
No, I think Southeast Asia is pretty safe. I think Thailand, because of the nature of the government and stuff, I think they have, from a tourism perspective, they have things under control for most part. The issues become when like hotels and airports, which generally are very high-profile targets, they get hit, and then everybody tries and goes to different places. So.
We've talked offline about what a great country Malaysia is and how more people should travel there. Is that Malaysia, Indonesia?
Indonesia, Vietnam.
Are you very bullish on these countries?
Yeah, I think so. I think they've done a very good job with the infrastructure. I think the key there is, can airlines start direct routes from some of the North American and European cities?
How did we see the crashes of various Malaysian airlines? They had a terrible string of luck. Was there an impact on travel data after those? Yeah,
China, obviously, Malaysia had a huge contingent of Chinese inbound, and that was affected big time after that as well.
So as people start to rethink traveling, I've got to suspect that there's some kind of reaction by hotels and lodging and airlines to try and induce people. I mean, is now in some sense a good time to travel when you gauge by expenses?
Yeah, that's true. I mean, UK, July and August, I think the number of bookings were like 20% up as well, just as a result of just being a weaker pound. So it is a good time to travel, especially in Europe, outside some of the flashpoints, if you will. For whatever said and done, France is still a very safe place in general, compared to some of the other parts of the world. Prices are cheap, hotels are cheap as well. The good part is there's a big battle going on between the online travel booking sites like Kayak, Expedia, and others, and the hotels on the other end, which means that one is trying to fight the others, which means that the prices are lower.
I see. So maybe prices are moving down more as a result of sort of this competition among all these online.
Between the OTAs and the hotels.
I still want to go back to that chart that Joe brought up earlier with Chinese tourist spending and how off the charts it is.
It's incredible, isn't it?
It is. And one thing that I've noticed is whenever there is the Golden Week in China, you have certain cities or certain resorts kind of overrun by Chinese tourists, because when they pick a place, you have hundreds of thousands of people descending on one little city that may not be equipped to deal with that kind of volume.
Yeah, I mean, it's the volume that comes out of China is off the charts compared to any other part of the world, even India to a large extent as well.
Is there any change in where they're going? Like, have we seen any trends from Chinese tourists, whether it's Europe or North America? Like, where are the hot places?
I think one of the things that's changing in the Chinese tourists, they used to be the cliche of Chinese tourists coming in these tourist buses and going to very specific parts of the world. I think that's changing, especially the younger Chinese. They're going beyond the hubs, beyond New York City to, let's say, they will end up in Philly.
Yeah, I definitely
those
saw
types
that.
of things are changing quite a bit.
You no longer have the big tour buses. You definitely see lots of individual groups, small groups traveling and going with the tour book as opposed to with someone waving a flag.
Yeah, so I think that is good news for generally the smaller, size B cities as well.
All right, Rafat Ali, founder and CEO of Skift, thank you very much for joining us.
Still ahead, Donald Trump's campaign chairman Paul Manafort resigned earlier today, capping a week of dramatic changes for the Republican presidential nominee. This is Bloomberg. I'm Scarlet Fu. It is time for the Bloomberg Business Flash, a look at some of the biggest business stories in the news right now. Ray Dalio's $150 billion Bridgewater Associates is paring losses in one of its main hedge funds with a gain of almost 3% over the first 2 weeks of August. That return trimmed declines this year for Bridgewater's Pure Alpha 2 to about 9%. That's according to a person with knowledge of the matter. The fund had lost close to 12% through July. A new lawsuit accuses Morgan Stanley of forcing high-fee in-house investment funds on the employees in its 401k plan. In the class action lawsuit, a former participant says the company treated its $8 billion plan as an opportunity to promote its own mutual fund business. The company is also accused of charging higher fund fees to its own workers than to outside investors. And Jay Fishman, former CEO of Travelers, who steered the insurer through the financial crisis and into the Dow Jones Industrial Average, has died. He was 63 years old. The death of Fishman, who had struggled with ALS, was announced today. For the better part of 2 decades, Fishman was the steady hand guiding Travelers through natural disasters, market cycles, as well as the Great Recession. And that is your Bloomberg Business Flash.
What'd you miss? Paul Manafort has resigned as Donald Trump's campaign chairman. That follows reports that Manafort helped Ukraine's then pro-Russian government secretly route payments to U.S. lobbying firms. This also comes just days after Steve Bannon was named campaign CEO and Kellyanne Conway campaign manager. For a look at the next steps for Team Trump, let's head to Washington with Bloomberg News White House correspondent Mike Dorning. Mike, welcome. First question is, is this as big of a mess as it looks like?
It's clearly a big mess publicly. You don't want someone to be running a campaign that is essentially a foreign agent or has been a foreign agent for people sympathetic to Russia. This is something where literally he was supposed to register as a foreign agent and didn't, and this is something that's dominated the conversation in Washington for several days. That's not the kind of reboot Trump was looking for.
Let's talk about the sequencing here, because obviously the resignation comes right on the heels of the Trump campaign having brought in new blood at the very top that some interpreted to be a demotion for Manafort. How much of this resignation is tied to he just realizes that the writing was on the wall, he was no longer in charge? How much was the bringing in of the new blood and an acknowledgement that bad news relating to Manafort's Ukraine ties was coming out? What's really the cause and event here?
Well, I can't get inside their minds, but I'm certain that it was the news coming out about Ukraine that would be the cause for this resignation. But it made it a lot easier that he became less important for the campaign at this point. He was already being de-emphasized, even though he was supposedly in among a circle of the top 4 people in the campaign still. But when you're looking at something like this and you're having all the conversation be about a top aide being a foreign agent for people sympathetic to Putin, and the person's already less important to you, it's not a hard decision to accept his resignation.
Well, speaking of an inner circle of top 4 people, it's notable that Ivanka Trump and her husband, Jared Kushner, were on vacation, at least recently, around the time that all these changes took place. Is there anything to read into that they were not there by Donald Trump's side when these changes happened?
I don't think I would read much into it, simply because this isn't really a very hard political decision. Again, it's very embarrassing, and you've already made a decision that you're going to go in a different direction, and you're just keeping him around for some continuity's sake. It's not a hard decision to make.
Mike, I want to bring a soundbite that we have from Trump's speech where he did something he doesn't typically do, which was some kind of apology, if we can play that.
Sometimes, in the heat of debate and speaking on a multitude of issues, you don't choose the right words, or you say the wrong thing. I have done that, and believe it or not, I regret it.
So, what kind of apology is this? Is this what my mother used to call crocodile tears, or is there what's going on here? What does this mean?
This is something that shows that he's doing what a lot of politicians do. You can't necessarily get everything back by making an apology, but it helps some. And you've got to make apologies sometimes, even if you maybe don't fully regret it in politics. And this is an example where Trump, the presidential candidate, is now doing something that they do in the big leagues in politics, which is when you start offending some voters, you make an apology, even if it's not going to win them all back, even if you don't entirely regret what you said.
In addition to Manafort's ties, there obviously the Hillary Clinton campaign, there's their own controversies around ties to foreign entities. We found out that the Clinton Foundation, if Hillary Clinton is elected, will no longer accept money from foreign governments. Will the Trump campaign be successful or be able to make some hay with Clinton's own connections to foreign entities now that Manafort is out of the way?
Absolutely. They would be able to make some hay even with Manafort, but it helps that he's out. I mean, there are foreign entities that have donated to the Clinton initiative, that have been involved with the Clinton Foundation. Certainly it's not unknown in politics for the pot to call the kettle black. And here is someone who was not it wasn't as if Trump was directly involved in Paul Manafort's activities. Now they've jettisoned him. So I would imagine that we would continue to hear about this. And even were Hillary Clinton to be elected president, you'd still see criticism likely from some donors that weren't from foreign entities, because where there's donors going to a foundation tied to someone, that leaves you vulnerable to criticism.
All right, Mike Dorning, White House correspondent for Bloomberg News, thank you very much.
Coming up, the status of sterling. Will it ever be a safe haven in a post-Brexit world? This is Bloomberg. Scarlet Fu, what'd you miss? The pound is off about 12% since the UK voted to leave the European Union in late June. So does sterling deserve safe haven status? Senior FX strategist at UBS Wealth Management, Jeffrey Yu, weighed in earlier on Bloomberg Go.
Firstly, if we go through the last few years, some currencies have became havens and then lost their status. I think the Scandinavian currencies, all super AAA, but no one really wants them anymore. Sterling provides enough liquidity, right? So if you need liquidity right now, we're in a cash-driven environment, sterling will provide it. And secondly, it's an optimal internal currency union. We don't have the euro structural issues to worry about. So in that sense, I wouldn't worry about the pound either. And I think the post-Brexit environment shows that.
Jeff, I want to pick up on something you guys have been saying at UBS Wealth, and that's that sovereign wealth funds and private investors will continue to be happy to finance the current account deficit. That's not a consensus view in London right now. What tells you that?
I think there are two sides to the story here. So firstly, you want to finance a current account deficit for what reason? And if that reason is you want access to the EU, then you don't want to be in sterling, you don't want to be in the UK. But most sovereign wealth funds, they will tell you they are not here just because of EU access. They're here because the UK's institutions. So the safety, that element that we talked about. Secondly, of course, there's a price issue there. Sterling's already adjusted, and relative to many emerging market currencies who've not fallen as aggressively against the dollar, it's looking quite cheap as well. So I think that element's bringing people in too. And thirdly, I would add balance of payments, financing by virtue of the correction in the currency as well, and also yields in the UK are falling. I think the income balance can stabilise and even turn around. So why worry at this point?
Jeff, here's a question for you. It's rather counterintuitive. Could we really face a situation where Bank of England stimulus actually becomes sterling positive?
Absolutely. And also, if you see Bank of England stimulus complemented by Philip Hammond's fiscal reset, combined with a fiscal stimulus, if growth begins to surprise to the upside next year and beyond, so in contrary to all the post-Brexit or pre-Brexit assumptions, then that could be conducive to the currency and also to other UK assets as well. We often talk about how FTSE is a beneficiary of a weaker sterling, for example, though that correlation is not constant. So if we do see the UK is underpositioned right now, growth surprises to the upside, then the flow will come in this direction.
Is this a catch-22, though? You see more flow, more foreign capital coming in. The sterling rises. That decrease the pressure on the government to introduce some kind of fiscal stimulus, reduce the pressure on the BOE to continue easing?
Well, for the BOE, I think they'll be a bit more careful here because, yes, we do believe that inflation is going to spike in the coming quarters, due to the currency effect. But if the currency remains, if the currency actually is strong over the next few quarters or so, and then that's over a 2 to 3 year horizon, inflation begins to undershoot the BOE's assumptions, then the BOE may have a bit more of a problem compared to other asset markets and the government.
That was Jeffrey Yu, Senior FX Strategist at UBS Wealth Management.
Coming up, what you need to know to gear up for next week. This is Bloomberg.
Don't miss this. U.S. new home sales come out Tuesday. Economists are looking for a slight decline from 592,000 annualized to 577,000 annualized. You know, it's still pretty, there's a lot of noise in these numbers, so you don't want to read too much into them, but given the importance of the housing and given the belief that there's still a big uptrend here, you want to pay attention to that.
And this is the more important number for the larger economy.
Right, because this is actual GDP. Existing home sales are important because people want to be able to sell and buy homes, but this is what creates jobs, is new home
Exactly.
sales.
All right, so you warned maybe not to read into it too much. You know what people will read into?
And far too much.
Everything,
Yes.
every word that comes out of Fed Chair Janet Yellen next week. This is obviously going to be big. She's going to be in Jackson Hole on Friday. Everybody's going to be listening into whether or not she comments on the outlook for rates, whether or not they comment on the global economy, adding anything to the Fed minutes, which we didn't get a whole lot from.
All right, and don't miss this. China's industrial profits will be coming out on Friday as well. And for the last period that was reported for June, the increase was 5.1%. If you come inside the Bloomberg, I actually have a chart looking at Chinese industrial profits versus the Chinese currency. And what you have here is the dollar rising in value versus the yuan, because we know the yuan's been weakening, and industrial profits coming off their lows from September of 2015. Cool. That does it for What You Missed. Thanks for watching.
We'll see you back here on Monday.
Have a great weekend. This is Bloomberg.
I'm Margaret Talev.
And I'm Josh Green. And with all due respect to Paul Manafort, we hardly knew you. TGIF. Mark and John are off this summer Friday, so Margaret and I are here in Washington, D.C. to do the show. You know, August is a boring month for presidential campaigns. Not much going on, news is pretty slow, and it doesn't always.
Paul Manafort, the Trump campaign chair, out.
Or maybe not. Trump's so-called pivot is taking many forms today. And as the AP revealed further ties between Paul Manafort and alleged shady goings-on in Ukrainian politics, it became clear that Manafort's only viable path was whatever the opposite of annexation is. On Fox News this morning, Trump's son Eric suggested that all the attention on Manafort's Russian business dealings were part of the reason why the chairman had to go.
I think my father didn't want to be, distracted by, whatever things that, Paul was dealing with. And, Paul was amazing. And, he helped us get through the primary process. He helped us get through the convention. He did a great job with the delegates, now you look at, Kellyanne and some of the other people that we're bringing in, and they're absolutely fantastic. And, I think they're going to be the ones that bring us, all the way through November 8th and ultimately get us the victory. But again, my father just didn't want to have the distraction looming, over the campaign, and quite frankly, looming over all the issues that Hillary's facing right now.
If there's anyone who sympathizes with what Manafort is going through right now, it's Corey Lewandowski, Trump's first campaign manager, who was pushed out by Manafort in June. So when Lewandowski went on CNN to talk about the news this morning, he didn't gloat at all about the man who ousted him.
At the end of the day, you've got people that had a vision for the campaign which did not align with what Donald Trump wanted. It's been widely reported that there has not been a robust ground effort in states like Florida that had not been laid out yet. You cannot blame the candidate for those things. Those things fall squarely on the staff. Sometimes you have to bring different perspectives in. Sometimes you have to change things, particularly in a campaign that in the last 3 or 4 weeks have missed, in my opinion, opportunities to go after Hillary Clinton for the failures of her campaign and to point out those failures. I don't think they've done a good job on that.
Or maybe he did glow a little bit. Margaret, what have we learned from the Manafort era and what comes next for Trump?
Well, I think the first thing that we learned is that Donald Trump is really hard to rein in. Paul Manafort's a pro. He's worked with